What's up, guys? Back with another video, and today I will get into the Wilshire 5000. But the question to the ETF thing for the Nasdaq. So the Nasdaq has the companies, the Nasdaq has an ETF. So that's the answer to it. The Nasdaq has an ETF that you can have. The modified one is ticker $triple Q, and then you also have the Nasdaq's own, which you can look up. Be like, I think it's NASDAQ or something like that, but I have to check again. But yes, the Nasdaq can be tracked on any brokerage platform, but the Nasdaq itself is just the exchange. So let's get into the Wilshire 5000. So before we had the S&P 500, 500 largest publicly traded U.S. companies. So what is the 5,000 for the Wilshire? So it's a broad base, which I would like to call S&P 500 basically. So broad base as in, we know the word broad, it's vast, there's other items, it's pretty much incorporates a lot of things. 5,000, that's the first keyword. So number one, what is the Wilshire 5,000? To me, my definition, broad-based S&P 500. And it aims to capture 100% of the United States investable market. So there you go. Just like the S&P with the 500 publicly traded companies, it tends to capture an area of the market, but the Wilshire 5000 wants to capture pretty much all the investable market. So that is what it is. Is it an investment? That's the other specific question. So is it an investment? No and yes. So you cannot directly invest in the Wilshire 5000, but just like the S&P 500, you have tickers as an ETF for them. So the ticker, one of them is $VTI for Vanguard's total stock market ETF, keyword Vanguard's total stock market. Therefore, the Wilshire 5000 wants to try and find 100% of the investable market in the United States. So right now it has less than 4,000 stocks, but at its highest at over 7.5K. So the Wilshire 5000, you're asking, well, what is so important about it? How can we use this? So if you want to have a broad-based investment from that ETF, you want to have somewhere where you can track the whole market and say, I'm going to invest in the U.S. stock market because historically it can rebound, and sometimes if it goes down, to go right back up. If you want to have that investment and you are extremely diversified with over, well, less than 4,000 stocks, but it could reach that again, 4,000. So let's just say it's at 4,000, around there. You have more opportunities for diversification than you were in S&P 500 now. Now, obviously, is that a bigger risk in a way? I mean, if you invest a lot of money in it and you invest in a lot of shares, the Wilshire 5000, yes, because it tracks the whole market. But if you would like to take that and go after it, that's all you. I'm not giving you advice, just information. And the Wilshire, about its weighting method, because I talked about the S&P 500, how it weights things, with things being certain market caps have higher market caps, have higher asset, or have higher allocations or percentages to the S&P 500. The Wilshire, their weights companies with higher firm value, so it overweights things, and sometimes it underweights things. So what I'm trying to say is that the Wilshire, when you're a company with high firm values, you're going to be higher up with higher weights. Just like, it's just similar to the S&P 500 in terms of these definitions I'm giving you guys. So it weighs things with higher market caps at a higher percentage. Things that are lower have a lower percentage. Just like the S&P, with firms with lower market caps, they get a lower percentage. Firms with higher market caps get higher allocation percentage. So an example, tech companies are weighted higher than consumer goods, just to put that down there, because tech is everywhere, tech is growing, tech is really large in terms of it being a sector. So the thing about the Wilshire 5000 is it just really wants to track the whole 100% of the investable market. So would I weigh that against S&P 500 and say which one to invest in? No, I'm not giving you advice, but I would just say, me personally, if you want to take a bigger risk and you want to go after more diversification, you want to track the whole market in a way, or maybe you want to try the SP 500's high dividend ETF, which you may or may not have to pay some type of fees on as well when it comes out of your whichever brokerage you have. You may have fees attached to it, or if you're Robinhood, the fees might be included, etc. But I would just say, if you want to have the whole market in your hands, basically, the Wilshire 5000 is the way to go. If you want something with 500 largely publicly traded U.S. companies, the S&P 500 index is the way to go. But that's not advice, that is just information. So you do whatever you want with that. But at the same time, just understand that S&P 500, that is for 500 largely publicly traded U.S. companies. I'm trying to say that fast at once. but the Wilshire 5000 wants to have 100% of the United States investable market. So take that as is, but understand the Wilshire 5000 is not at 5,000 stocks right now. It's a little bit less than 4,000. S&P 500 may have 498, 478, but the thing is, both of them do track a lot of companies, and it's better for you to take those, in my opinion, not advice, just information from what I see, from what I get. I would say it's better for you to take those sometimes and to try to do individual companies maybe, but at the same time, it aims to capture the whole entire investable U.S. market. So guys, thank you for watching. I really do appreciate it. I hope it was very informative. So out of the S&P and Wilshire, you make your decisions. 2 videos on that. And remember, the NASDAQ is your exchange, and it has its own ETF as well. So you have 3 ETF videos in a row. We got you the S&P 500 with the NASDAQ and the Wilshire 5000. So now you guys can do your research on those and see which one you want to invest in if you want to. But that's not advice, that's information. Thanks for watching, guys. Tune in for the next video.